What's going on, guys? Welcome back to another video. So in today's video, guys, I'll be showing you guys the TradingView app and how it runs on the MacBook Air. I know there's a lot of you guys who have been asking me in the comment section, whether you should buy a MacBook Air or an iPad Pro. So in today's video, what I'll be doing is I'll be showing you the TradingView app. I know that's one of the apps you'll be using the most during your trading journey. Spending a lot of your time doing technical analysis. So, this is kind of the most important thing that you guys need to see before you buy a MacBook Air. Can you do your technical analysis and how does TradingView run exactly? So, what I'll do is I'll set it up from scratch. This is a brand new account. I'll set up the chart exactly how I would do it. I'll show you guys the features of the app. It's very similar to the website version. So, if you're familiar with, using it, online, it's very similar. It's just the app version. So as you can see down here, I am using the app, so you can get the app on Mac OS. But yeah, I'll just be setting it up, walking you guys through it, showing you some features, and hopefully you guys get a better feel for how the TradingView app runs on the MacBook Air. But I also did make a TradingView video on the iPad Pro. That was my last video, so if you guys want to check that one out, you can. Because I know a lot of you guys are trying to decide between buying an iPad Pro or a MacBook Air. They're both in a similar price range. So, hopefully this video gives you a better perspective of, what it's like to trade on the MacBook. And, like I said, the previous video, if you check that out, you can see what it's like to trade on the iPad Pro. And, you can compare the two and see which ones you guys, feel is, better. And essentially that way you can make a better decision when buying the products. Okay, so the first thing I'm going to do, let's get into it. I'm going to set up the chart exactly how I would, it's very similar to the theme of the previous video, but this time obviously I'm using the MacBook Air. So yeah, let's set up the chart. First thing, obviously here you can see I struggled in the last video to get rid of this, the volume indicator, simply because on the iPad it's a little bit different. I haven't got the trackpad or the keyboard in front of me, but here I can simply click on the indicator and just press backspace and get rid of it. As simple as that. And if you compare that to my previous video where I was trying to get rid of it on the iPad, you'll see how how different it is. Maybe it's my fault, I just didn't know where to look, but it was a lot more difficult to get rid of that on the on the iPad, simply because there's no backspace. But yeah, that's gone. And again, another thing I'll do is I don't really want the the economic event calendar on my chart, so I'll just should be able to just backspace that as well. Okay, no. So here, yeah, we can just right click and hide events on chart. And that way we don't have these on our chart. And then another thing I'll do is, very similar to how I'd set it up on the iPad, is firstly I would change the color of the candles. So like I mentioned in my previous video, I like to have very simple candles. I don't really like to have the red and green candles. I just have a black and grey. So let's change that. Let's get rid of this, make that black, make these black, and yeah, that's simply how I have my candles. So black for the bearish candles and grey for the bullish. In my opinion, it just looks a little bit more cleaner, but you can always have it any color you choose. And then the other thing I would do is get rid of the grids in the background. Bear with me. Yeah, so again, it's a little bit different. On the iPad there, you can tap on a tab that opens this up, but here you simply just right click on the chart and everything comes up. So you just go settings, canvas, and here just change it to the grid lines to white, because I don't need any grid lines. I just need to see the candles, and yeah, simple as that. You can see how much cleaner that looks. Already there's less going on, but you can still see what you need to see, which is the candles. Yeah, so the next thing I'll do when setting on my chart is add my indicators. Here you can see you got the indicator tab. So I'll use moving average. Let's use moving simple, and then that would make that time frame 20 for my shorter time, and then I'll add a second moving average. Let's add that in, simple again. Let's make sure this is the, okay, that's the 20. And then the next one I'll make 50. Simple as that. And let's change the color of that so we know which one's which. Style, let's make that red. Okay, so that's done. So that's literally all I use for my indicators, is 2 moving averages, and you know, these help me, you know, kind of see where the trend of the you know, the market is. But yeah, so looking at this chart, this is a daily chart, so you know, this is a lot you know, longer time frame for the moving averages I've used. So let's you know, the first thing let's do that we need to do, sorry, is add the time frames that I trade personally. So I do trade a day and a week, but I don't really trade them. I look more, you know, at the overall trend of the market, you know, for the long term. But the ones that I look at more, I do look at 4 hours again for the long term. But the ones that I daily trade are an hour, 30 minutes, 15 minutes, and you know, the lowest I go to is 5 minutes. So you can see here I favorite all of them just simply by clicking on the star next to them. On the iPad, if you remember from if you've seen the previous video, I would have to hold down and then, you know, add to favorites, hold down, add to favorites. Here is simply just click as you go. Already you can see, you know, it's a lot more simpler to use on the MacBook just because you've got that trackpad and the keyboard in front of you. So if that's something that you look for, you know, simplicity when using it, you know, time efficiency, then, you know, you can see the MacBook is standing out here. But okay, so yeah, that is set up. The other thing we need to do is the watch list. So, you know, like I mentioned in my previous video, I don't really make a separate list. All I do is just add to a red list, just like that. So that when I go here, red list, you know, I can just see the main assets that I trade. To add an asset, you simply click here. Let's add gold. It's always interesting to watch. The pairs that are GBP Japan. Let's add that. One of my favorite pairs, GBP AUD. Let's add that. Do we have Bitcoin? Like I mentioned in the last video, is always interesting to watch, so let's add that as well. Let's go here, forex, see if we missed anything. USD Japan, cables already there. EURUSD, we can add AUD USD, USD CAD, USD Japan. But yeah, let's go with those for now. But as you can see, you know, on my red list here, you know, I can extend it out, but obviously more of the chart gets hidden, so let's you know, keep on the side. I like to just keep it like that. And yeah, so you know, now what I'll do is I'll simply show you how I would, you know, go about analyzing a chart, and you can kind of get an idea of what it looks like on a MacBook, and you know, kind of how it runs on the MacBook Air. So what we can do is add a favorites bar. So let's you know, like on the iPad video, you know, if you've seen that, you'd know that my my favorite tools are the following. So trendline, Fibonacci, obviously you need your long position and short position tools. What else was there? Rectangle. I like to use rectangle to highlight my key zones. So yeah, here we can see the other one I use is channel. Is it channel? Where is it? Parallel channel, that's it, yep. So I added that to there as well. And yeah, that is pretty much all I use. Let's go with that. So here you can see when I favorite them, they've added it to my favorites tab here. So I've got that here. You know, it's easy. I don't have to go through the individual you know, tools on the side. I can simply select the ones that I need from here. Again, the trend line, I would highlight. This is another thing. So on the iPad, I would have to, you know, draw on my trend lines at the levels that I want. The levels that I would use, like I mentioned in my previous video, is the psychological levels. So your round figures, you know, they tend to have the most you know, memory when it comes to price. So let's say that is my 1.30. On the iPad, I'll simply have to draw it like that, and then what I'll do next is I'll go to the settings and then extend left and extend right, and then like I mentioned, I would decrease the thickness just for my accuracy when you know, wicks come around that level, and and then I can also make that black, keep the chart nice and simple. But here instead of doing that, what you can do instead is hover your mouse around the 1.3, so the same price level, the psychological level. Let's go 1.3, is quite precise. And then if you click options and H, it will print on, you know, your key level, and it also highlights the price for you, which, you know, obviously I can't do on the iPad, as you saw on the previous video. So here, not only can we see the key level, but we can also see the price. So again, instead of having to use the trend line, go down to my next key level. So let's go down to 1.20. Hold on, let's get rid of that. Let's scroll down a little bit. So 1.20. Here, what I could do is go to the trend line, go to 1.20, and then draw a trend line like this. But alternatively, like I said, you can hover over the 1.20 price and hold options and press H, and it'll print on for you just like that. And then next one, 1.250, options H, you can see it prints on straight for you. Again, with the thickness, I use the minimal just because, like I said, it's more accurate. So let's adjust that. Okay, so yeah, so as you can see, you know, we're starting to get a structure together. You know, straight away looking at that, just by drawing on 3 key levels, we can see that price is consolidating to the right. You know, I didn't use anything fancy. There's nothing, you know, no technical language going on, you know, a lot of people use. Just simply, you know, you've got your, we can call this resistance, your support, and then, you know, another support down here. But obviously at the moment where price is, these are your main focus areas. So you got your resistance and your support level. And the next thing I'll do, here we can see some wicks around this support level. So, you know, price rejected around these levels. So I'd simply get the rectangle tool, draw on a rectangle around these levels, and yep, that's what I'll go with for that. And then yeah, so I'll print that on, and then for that setting I will keep the outline black and clear the center of it, so we can see the wicks through. And just like that, we've got a key zone that we can look at. And now what we could do is wait for price to get to this level, and then, you know, look for an entry around here, which is the support and the key zone, because we've seen prices, you know, reacted at this level before. Here it's previously wicked and then it's gone back up. Again, it returned, wicked, went back up, and then in this situation it broke through, and then, you know, it came back up, and then you can see a wick again before price went back. So that's the potential. On the upside, looking at the resistance, we can see a wick around here. So what I'll do is I'll draw a wick in that area like this. So then we can extend that across to, you know, where price currently is. And then when price reaches this area, we know that previously, you know, price rejected from that level. So it's possible to happen again, because as we know, you know, the markets have a memory, price has a memory. So yeah, so, you know, looking at this now, this zone that I've created, you know, let's check if it's actually valid. And you know, how can we, you know, you might be asking, how do we know that price is going to reject from there? So let's go back, let's extend it back again. Look, rejection, price broke down, it was a break retest, retested this section, key zone, you want to call it, whatever you want to call it, respected, rejected down, and then you can see a short position went in, right? And let's go further back. If we extend it further back, again, same thing. You can see here, price came here, rejected, price came here, rejected, and then, you know, a little breakthrough, but then it didn't hold, then came down, rejected, down, then it came up, then you can see this candle here, it retested this zone and then went back up. So if we extend it even further back, you know, again, like I mentioned, price has, you know, a memory. This is why the levels that I've highlighted, they're key levels, psychological levels, because the price is, you know, it's got history. Again, wicks, wicks, wicks. We can take it even further back, but you get the idea. Look, you can take it. I haven't, you know, looked at it previously. Again, wicks here, rejection, you know, break retest, this goes up, And then the same thing we can do, like that's not really much to go off, but let's go back and see how significant this zone is. Again, same thing. Here you can see wicks in the zone, price rejected. Let's take it further back. Again, wicks before price went up. On this side, when price came here, broke through, retested this area, went down, retested, down. On this side, look, price broke through, you know, there was a resistance previously, became the new support, price went up, simple. And like I said, you can keep going back. I haven't done anything fancy here, I haven't used any fancy terms or, you know, to confuse you. You can see wicks, 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 wicks. It's simple as that. You don't have to overcomplicate it, guys. And I know there's a lot of videos out there that, you know, will tell you this is a key zone, blah blah blah. You know, the market's doing this, traders are doing this. You don't need to know what traders are doing. You just need to know where price is going to reverse. That's all you care about, or where it's going to break through, or which way the price is heading. You don't need to know what other traders are doing, or what this bank is doing, or, you know, liquidity zone, this, that, the other. It's just, you know, unnecessary jargon that you don't need to know. So yeah, simple as that. So now we can simply wait. We can see our moving average is going up and they're below the candles. So we know it's quite bullish at the moment. So what we wouldn't want to do here is place a short around here. You wouldn't want to place a short in this area because you know the price is going up. So you know you're betting against yourself basically. You know price is heading up. So why would you enter a short position? The better thing to do here is put a long position above this zone. So if this momentum holds, and if we have a look, you know, just to give you guys an idea, say that's the channel. If this, you know, momentum holds in the bullish channel, then price will break this zone here. When it breaks through this, we can wait for a retest, or price will just keep going up, and we can put a buy stop here. And once it's triggered, sorry, that's the wrong one. Spin that. Where's the long one? Yeah, so if we have a buy stop here and price breaks below, above this zone like it previously did, but it didn't hold. So what we can do is we can put this a little bit higher, right? So if this momentum holds and it keeps going up, then, you know, it's just going to trigger your trade and you're just going to keep going up to the next key zone, which in this case is 3.1. Hold on. 3.5. 1.35, sorry. So let's print that on there, right? And then that's your next zone. And then we can see here the zone. Where did price reject? We can see some wicks here. So what we can do is we can put a box around that, extend that left, and extend this right. Easy as that. And then you can put your take profit at this next zone. If it breaks that and goes up, then that's fine, but we want to play it safe. You know, we don't want to just guess. We know it's going to go to the next zone before, you know, price starts to struggle or it breaks and retests. But let's just take the profit at the 33 pips. And then we've got our stop loss. Obviously, we can have 30 pip stop loss. And you can see that's below the zone. So, you know, you've got plenty of breathing room in terms of your trade. All right? Simple as that. Let's do it on another chart. So, EURUSD. Here, you know, looking at it straight away, I feel like drawing a channel. So that's what I'm going to do, because I can see a little bit of a, you know, a bearish trend going on. So let's extend that across just like that. Okay. But we can see price again, you know, just looking at that. I haven't done anything crazy. I've just looked at the market. I've seen a downward trend. So, you know, I've highlighted it on my chart so I can see it. In my settings for this, what I'll do is I'll make this black, you know, make it just, you know, I don't want it too filled in. Again, the lines, I would make them 1, just for, you know, accuracy around the wicks. So yeah, look, again, we can extend that further if we wanted to. In this case, it's not really significant if we do that or not. But it works. We can see, you know, we extend it back. You can see it's wicking at this thingy. Sorry, at this on the channel. Prices broke the channel, and it's retested this line. So this is your trend line already. Okay, so the next thing, like I said, every chart that I look at goes psychological levels 1.10, options H, print that on. Next one 1.15, so let's print that on. Done. Next one we can look at is 1.05. Let's print that on. Okay, so again, now we've got a little bit of a structure going on, but we can see price has broken out of this trend line, which is, you know, it's perfect for us because we know the downward trend, this bearish trend, is finishing, and that price is looking, you know, the momentum's looking up. Our moving averages support that as they're below the candles. So, you know, simple as that. Next thing you want to do, again, we can see where the wicks are. You see the bodies of the wicks there. Let's start off just by having it there. And again, I haven't looked previously at the chart, you know, just by drawing that on, you can see how it just adds up with all the other wicks. So, you know, price definitely has a memory where it wants to, you know, reject, where it doesn't. So here, wicks again, wicks, more wicks. So what do you think is going to happen when it gets here? It can either reject, but like we said, the momentum's up, right? We're in a bullish, like we're looking bullish at the moment. So again, we wouldn't want to bet on a short, right? I understand it's the resistance, and a common thing that we want to do is put a short position here because we think, sorry, a short position. So we'd think, oh yeah, price is going to come here, I can see a wick, it's going to wick down. But why would you do that? You're betting against yourself again. The price is heading up, not down. So that doesn't make any sense. Just a sec, guys, just making sure you can still see. Yeah, so as I mentioned, you wouldn't want to bet on a short because, like I said, price is moving up. So what we want to do instead is we'd wait for price to get to this level. We'll see how it reacts. If it wants to go down, it will go down. But at this moment, you know, you can see the moving average is up. So the better thing to do, like I mentioned, the safer option to do is you put yourself a buy stop just above this zone. So if price breaks above this zone, you know that the momentum's up, and then it's going to go towards your next, you know, key level, just like that. So there you're looking at about 45 pips. Sorry, 400 pips, as this is the daily chart. But yeah, this obviously is a daily chart, so your risk and, you know, your pips will be a lot different. But it's still same principle. Wait for price to break through. Respect your key zone, which will be your new support if it breaks the resistance, new support, and then you'll be looking for price to head up. As simple as that. And, you know, we can highlight the next key area. Again, wicks. Look for your wicks, because that's where you want to see, just like that. Let's align that like this, and then extend it across, and there we go. So when price gets around this area, you know it's going to slow down, it's going to reject, you know, you might see a reversal, so we can take profit and get out of the trade. Again, with this, extend it back, you can see wicked. It's very simple. The hard part is, you know, being consistent and, you know, sticking to this, and, you know, not just jumping into a trade just because you see something else. Like I mentioned, here it's very tempting to get into a quick short here because, you know, price will you know, pull back like it did previously, but there's nothing, you know, concrete that's saying that it will 100% do that. So, you know, play it safe, you know, protect your, you know, your capital, and, you know, get in at put a buy stop there. If price breaks through this, it's only going to go up, unless, you know, obviously something happens in the markets and, you know, there's some economic event happens. But like I said, you don't want to risk it, so don't put a short there. You can if you want to, you know, if you want to play it risky and you know how to handle your risk. But yeah, most of you guys, you'd want to play a safer option and you know, have as much breathing room as possible. So a buy stop in this situation will make perfect sense. You'll break through and then you can carry on. and it's as simple as that. So, you know, I've shown you guys how I would approach a chart and how I'd go about analyzing it. You can see how quick it is. It's very simple. I don't use any fancy indicators. I don't, you know, like, you know, talking to you guys, I haven't said any fancy terminology that will confuse you, that you need to learn. It's just as simple as looking at the market. You know, this all comes from sitting in front of the charts for a lot of time, like, you know, like I did when I first started. You know, I spent about, you know, around 8 to 10 hours a day just looking at the charts, looking at different patterns. You know, I didn't know anything about risk to reward ratio back then, so I would just put on anything. I didn't know what was a key support and what wasn't, what was a key resistance level, because it's very easy as a new trader. So let's get rid of this. Let's get rid of everything. As a new trader, you know, you can see this, oh, like price rejected here, so I'm going to put a resistance level there. But the thing is, how, you know, significant is it? You know, you can see here, like, looking at this, you'll be like, oh, this is a resistance level, resistance, oh, price rejected. But you can see it rejected for a little while, now it's broken through because it's a minor level. But your psychological levels, where your round figures are, you know, you can see all the way back. When you take it back, it's consistent. There's always something going on here, and there's significant moves or reversals. It's not just short term. Again, like something like this, maybe some news came out and that's why it significantly shot up, because that bullish trend was quite a lot of pips. Here you're looking at around, what is that, like 400 pip movement. So yeah, like I mentioned, these psychological levels, the round figures, are going to be a lot more helpful than those minor levels that you draw on. So yeah, guys, you know, hopefully that was you know, quite helpful, just having a look at how I would approach a chart. But yeah, that's how, you know, that's essentially how TradingView runs on the MacBook Air. You can see it's very smooth. You know, it runs without any hiccups really. You know, a common question I get is, you know, do I need a specific memory, you know, 8 gig RAM, or, you know, the 16 gig RAM to run TradingView? You know, guys, I've got the very basic entry-level model, M1 MacBook Air 2020, 8 gig RAM, 256 GB storage, and, you know, I don't just use it for trading. You know, I make these videos, I edit photos, I edit videos, you know, I trade on them, I use, you know, Safari, YouTube, everything. And, you know, I've been using it for 4 years and I'm yet to see it have a problem. It does not struggle with anything. Obviously, if you're going to push it very far, like, you know, run very specific softwares for trading, you know, because for me personally, I use MetaTrader on my phone to enter my positions. Only my technical analysis is done on my MacBook Air. Then maybe you need a, you know, a better spec. Again, if you want to use it for other purposes, you know, for, you know, maybe for college or university, and you're running like Photoshop or, you know, Adobe Cloud, then I would say, you know, go for either a Pro or upgrade, you know, the storage on this. But apart from that, you're not going to have a problem with the MacBook Air. But yeah, guys, that is how TradingView runs on this MacBook Air. It's the M1. Obviously, you have the M2 and the, you know, the M3 now, so they're even better. If this is, you know, 4 years old, is running perfectly, I can only imagine how good the M2 and M3 are. But yeah, so that is how TradingView runs on the MacBook Air. You know, looking at that, you can compare it to my previous video of the TradingView app on the iPad. Very similar, but you know, if I say, you know, personally, I think the MacBook Air, like, using it for your trading analysis, it's just a lot more efficient. It's nice to do on the iPad Pro, but like, you know, you saw, if you compare it to my iPad video, you'll see how much easily I done this compared to when I done it on the iPad Pro. But yeah, in this one I did go a little bit more technical and you know, show you guys exactly how I would break a chart down. I hope it helped. If you guys want more videos like this, please let me know. But yeah, guys, that is TradingView on the MacBook Air. In terms of the tools, you know, you got everything here. You got your indicators at the top, time frames. You can change the candle, you know, the chart types. You got your currency pairs here. And obviously I know some of you guys want to connect to brokers. Where is that on this? I don't personally use it myself, but I know you can. Yeah, here, look, trading panel. I will start using it with IC Markets. You can open your account here, you can connect your broker like you would. And yeah, thank you guys for watching. If you made it this far, please leave a like and subscribe, and I'll catch you guys in the next video. Thank you.